Circle's USDC becomes the first stablecoin issuer authorized by MiCA. Meanwhile, Tether's USDT claims they have no intentions of complying with the MiCA law. And what danger could unravel from the fact that the crypto ecosystem is currently in a completely artificial rise that no one is believing? In this video, I will explain its consequences. Jeremy Allaire, co-founder and CEO of Circle, announced that the company became the first stablecoin issuer in the European Union to obtain regulatory approval under the broad regulatory framework of the EU's markets in crypto assets MiCA. Circle's USDC and YER currencies comply with the regulations with immediate effect. Allaire announced that Circle had chosen France as the company's European headquarters, citing France's progressive stance on digital asset regulation and Circle's working relationship with the French supervisory authority. Allaire said the concept of fiat digital currency didn't even exist outside of the early cryptocurrency circles. The idea of seeing major global laws enshrining stablecoins in the financial system was inconceivable. We can't take any reason away from this statement by Allaire. Honestly, a couple of years ago, thinking about this kind of scenario was unimaginable. In June, the cryptocurrency trading and custody platform Uphold announced that it was delisting 6 stablecoins in an email sent to its European users. Bitstamp followed suit and delisted Tether's YER stablecoin that same month. Binance also adopted a similar but softer approach by adopting a sell-only strategy for certain stablecoin products in the European market. And I'm sure many are wondering, how is it possible that Tether is staying on the sidelines of the MiCA law? Well, Tether, the issuer of the USDT stablecoin, indicated that it currently has no plans to comply with MiCA, which explains why it is subject to restrictions or delisting on exchanges. Tether's CEO, Paolo Arduino, opposes MiCA's expectation of 60% backing in bank cash, as according to Arduino, it would imply the risk of bank failure. Paolo Arduino said stablecoins should be able to hold 100% of their reserves in treasury bills instead of exposing themselves to bank failures by holding large amounts of reserves in uninsured cash deposits. In the event of a bank failure, the securities revert to their rightful owner. Honestly, we only know what Paolo Arduino can tell us or what he wants to convey to the world about why Tether is refraining from complying with the MiCA law. But if we base ourselves exclusively on what he tells us, his argument makes sense. However, this same statement would also imply that regulators are doing an extremely poor job of ensuring the safety of retail investors, and that stablecoins complying with this law, by extension, also put their users at risk. A reflection that, honestly, I don't agree with at all. In other words, what Paolo Arduino tells us makes sense, yes, but if we think about it, it loses a lot of strength. Binance's CEO, Richard Teng, praised Circle in a post, calling for more participants in the sector. Richard Teng said that USDC becoming a MiCA-compliant electronic money token EMT marks a positive step forward for the cryptocurrency ecosystem in the European region. We hope that soon there will be more MiCA-compliant EMTs. Here we fully agree with what Richard Teng says. In the end, what Europe is doing is telling perhaps more traditional entities with great economic management capabilities that they can enter this interesting and liquid ecosystem of stablecoins, and now in a regulated manner in Europe. Certainly, everything has its good and bad parts, but I also want to say something here. When talking about Tether and its issues with Europe, more than one person might think that Tether is going to zero or that they might lose all the Tether they have on exchanges or something like that, but nothing could be further from the truth. It's simply Europe implementing a law that Tether, for whatever reason, doesn't want to comply with. Therefore, now the ball is in the court of the exchanges, and each of them will decide whether to delist this Tether asset from their platform. If they do delist it, what the exchanges won't do is commit theft and take all your Tether. They would simply convert your Tether to another stablecoin such as USDC automatically, and that's it. At the same time, this narrative doesn't imply that Tether will lose its peg to the dollar. It doesn't make sense. So everyone, stay calm. Tether is safe. Let's keep living as happily as we did yesterday. Now, let's analyze the crypto ecosystem. Let's answer the question of what we can expect next in the short term from Bitcoin and other cryptos. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Let's start by analyzing Bitcoin. Remember that in its 4-hour time frame, we are in a key defense zone where smart money comes to protect their well-positioned purchase after a significant rise. Now that I've given you some context and after seeing that we are coming from a significant aggressive crypto drop, let's focus here. What we are seeing after the big drop is the formation of a bullish accumulation process. It's nothing we haven't seen in previous videos, it was something we were looking for. And now we've seen that the creek has been broken with great force. At the same time, we can talk about corrective patterns, as we have a strong downward impulse here. This is a W, this is a poor E, and here we have a Z Z with all the elements of a proper Z. Actually, we don't have it drawn here, but we have a directive of the Z. Why don't we have it drawn? First, because we already know where it is, we won't forget. Second, because we are giving greater importance to the creek of the accumulation, as after the break, the price hasn't been able to come back to touch the creek, which makes us a bit wary, as you will see next. And thanks to cross-analysis, there's an altcoin giving us invaluable information that indicates it makes sense, in the short term, to look downwards. Look at this asset, which is Cardano. Honestly, Cardano as an asset itself doesn't matter to me. I don't consider it important or representative for the crypto ecosystem. I mention this for new users who have never seen how we analyze in Crypto Insight our cross-analysis methodology. While we are interested in what Bitcoin and Ethereum are doing, we are able to interpret through other assets that occasionally have little weight in the ecosystem, like ADA, Cardano, or Solana, for example. In certain market contexts, it will be one asset or another that provides much more detailed and simple information to see, which justifies something that cannot be seen simply in other assets. In this case today, it's Cardano's turn tomorrow. It will be, let's say, Polkadot's turn, and the day after it will be Solana's turn. I think you get the idea. As for Cardano, we won't go long-term because we have videos discussing the long-term outlook of Cardano, and I think it's unnecessary to constantly revisit such high time frames. Let's focus on what we're seeing now. Here, it may seem like the line is floating, but if we briefly switch to the 4-hour time frame, notice that we have strategically placed our key line, the all-seeing eye, at this specific price level of $0.41. Going back to the 1-hour time frame, what are we seeing? Let's focus on the key point. Here we see a strong upward impulse, very powerful, similar to the previous strong downward impulse. Notice the aggressiveness with which the price can move, driven by institutional manipulation embedded in financial markets on a daily basis. It's not something I'm making up, it's something you're clearly seeing. Markets move with a lot of volatility and explosiveness, and now I want you to pay attention. After this strong upward impulse, notice how the price is struggling to rise. It's like an old lady living on the 8th floor whose elevator isn't working. Initially, she ate a yogurt full of probiotics, feeling energetic, but then the yogurt lost its effect, and she was left climbing a very heavy staircase, one floor at a time. In other words, the impulse is losing strength. Therefore, the buying power is weakening. When we see this kind of behavior approaching a structure that we at Crypto Insight speculate to be key, and here we open a disclaimer we could be wrong, we are speculating, of course, but we think that Cardano is bullish, right? Let it keep rising as much as it wants. We honestly don't know for how long. It might even extend to set traps, who knows? Maybe Cardano keeps rising, but what do we want to see? We want to see this wedge get broken and hit a key structure. This would lead us to think, in the short term, to look downwards. We're talking short term, not that we're going to zero. While Cardano makes this downward move prompted by the wedge, in the case of Bitcoin, if we look for the institutional target of all this accumulation, we've taken another measurement that has led us here. Institutions work on institutional targets in advance of the expansive movement. They already know where they will take their price, and there is a conservative measurement that takes us just where the price has already hit. This leads us to think that if Cardano, acting as a snitch, tells us it can keep rising and will be the one to notify us when it decides to start a downward journey. And since we know that all cryptocurrencies move together, it's not because Cardano is important, not in the least, but because they all move together. We can think that Bitcoin will do the same. Therefore, if this is the Z directive, of course they can rise a bit as much as they want. Cardano is in that wedge. Let them rise as much as they want, or maybe they don't need to rise that much. What is the important moral? That at some point Bitcoin will look for that creek or will look for this volume node concerning this entire accumulation process. And here we will see if the price can turn around and continue its upward path. As you are seeing, the wedge hypothetically breaking in Cardano's decline doesn't mean cryptos are going to zero. I was talking about the short-term 1-hour chart. Look, if this downward move is an insult considering Bitcoin's daily chart, well, it's just a sneeze. I hope this has helped you understand the analysis. And if you found this advanced cross-technical analysis from Crypto Insight interesting, I invite you to leave your opinion in the comments. Also, give the video a like, subscribe to the channel, and click the bell so YouTube can notify you of future posts. Don't forget to share this video with your friends and other trading and cryptocurrency communities so that day by day we grow stronger and better together. Good luck with your trading and see you next time.